Okay, everybody, so the last couple of weeks I've been teaching about Elliott waves, so now I'm going to teach the style I trade. I use Elliott waves a lot for my forecast and to figure out what I'm going to trade on in the smaller time frames, but this is what I actually use to find entries and to play trade in the smaller time frames. So the first thing I'm going to talk about is flag formations. These ones are pretty great. Now, with a flag formation, I have one highlighted here. I highlighted a couple examples already. So they are continuation patterns, and they usually find their place in the middle or end of a trend. So the first thing you're going to have to do if you want to trade a flag is figure out the direction on the higher time frames. So for this right here, from where we had entered, or would have entered, would have been over here. Now on the daily time frame, obviously, it looks like we have some kind of range going at this point, developing. Looks like it started going down, so it's not too bad. Of course, just looking at this, you wouldn't really know. I'm taking a look at a couple other time frames. Right here, it looked like it had started going down. Now, the big thing is the 1 hour. The 1 hour, you can see the price had been moving down on this day. 30-minute, again, price, it looks like it had started reversing. So on the 15-minute, you see the strong down move, followed by that 2 push up. Now, when entering a trade, after the strong down move, this 3-wave push up, 1, 2, 3, similar to the corrective pattern in Elliott wave. And like the corrective pattern, typically it extends to the 100 level, not always. In this case, it got to the 61.8, which is, again, still fine. Now, what would disqualify this, your invalidation point is the 1618. Once it hits that, the pattern has been invalidated when you're trading a flag. Now, when it breaks out, well, how you trade this is the breakout. So when it breaks through the bottom of the trend line, in this case, it'd be a short trade. As you can see, the strong push down, followed by the 3-wave up. Then you should look for one final push down. Now on this, a stop loss would be the highest point of the pattern, which would be here. Followed by that, you're going to be looking for the inverse 1618. So you're going to do this on the pattern to the highest point. Inverse 1618 is right here. So on this trade, it would have hit the take profit. And on this particular trade, taking a look at it, let's take a look here. 45, so we should look for 90. It would have just been just short of a 1-2 risk-reward ratio. Which, in that case, it's not a trade I would personally take. I only trade things with the 1-2 risk-reward ratio, but this is simply to demonstrate what the pattern would look like. I'm taking a look over here. We see a small little, what looks like a head and shoulders, but I'm going to teach that in a little bit later. So I'm moving on to the next flag formation. Let's go. That's a head and shoulders. Here we go. Here's the next flag I'm going to be talking about. That's just for my purposes. So you can see that it had a push up, followed by that 3-wave push down. Ignore this, as this is a bit in the past. This is April 10th. This is a bit outdated for this. Now, taking a look at this first, you're going to check this. Typically, it extends to the 100 level. And in this case, it does hit almost exactly that 100 level. Let me just adjust this. Well, it does hit that 100 level exactly. So, of course, you're going to be trading the breakout. So when it breaks through this trend line and closes above it, that's when you enter a buy trade. Again, stop loss is here. Your entry would be here. Inverse 1618 is a take profit. So taking a look at this trade, it looks like it would have hit its take profit, and shortly after that, would have continued going even higher. But we would have already hit our take profit. On this trade, it looks like it would have greatly exceeded almost a 1-to-3 risk-reward ratio we would have gotten on this one. So I definitely would have taken this trade. Now let me move over here. See if I had anything else on here I had wanted to look at. Yes, another one. So in this case, you can clearly see that it's moving down, a clear downtrend. This is more up to date, so you can see it in all the higher time frames as well, a clear downtrend. It's clearly moving down right here overall. Now when trading these patterns, one big thing I should mention, to have the best result, you'd want to confirm the trend on both the 1 hour and the 4 hour time frame, or the 4 hour daily. You'd want two of those time frames to be in confluence with each other. So if both are going down, then you'd only be looking for sell setups. So this would be a sell setup for a flag formation, so this is something you would take. And again, when taking this trade, the 1618 is always the invalidation point of a flag formation, and typically it'll end at the 100 level. This one ends just above the 1618, so we've already seen that once before, which again, that is fine after breaking through. Our stop loss would be here. Our take profit would be here. This again is on a smaller time frame, the 15-minute, dropping down to the 5-minute. It'll let you see more clearly. And inverse 1618 would be the target. Now that looks like I just used this. So again, target would have been hit, and it would have continued pushing down a little bit lower. And this would have been, let's take a look here. This would have been about a 1-to-3 risk-reward ratio, it looks like. So let's exit out of that one. Let's see here. I'd already talked about this one. Let's see if I have two more flag formations. So again, a push up. On this one, you see all the time frames are in confluence with each other, which you can also check up here. Strong uptrend here. You can see the strong uptrend here after that downtrend. And right here on the 1 hour, you can clearly see it's an uptrend with these little pullbacks here, which on the 15-minute, you can see the pullbacks like this. Now taking a look at it, you're going to go down. Looks like it ends at just the 100, breaks out. This one would have almost hit the stop loss. Just about hit it before, again, shooting straight up. Now on this one, let's take a look here. It would have hit exactly the take profit target on this one. And again, another downtrend. This one has just started and had just broken out for this flag formation. So taking a look here, it looks like the target still hasn't been reached. So on Euro, Great Britain, Pound, it should continue pushing up to at least the 0.87851 level. Moving on to the next pattern, we're going to take a look at one more flag formation. This one, again, the three-wave push up, should extend to the 100 level typically. This one hits the 61.8 level. So again, that is fine. After breaking out, it pushes down, and as you can see, this one hits the 1618 as well. And again, the invalidation for these is the 1618 extension of the first leg. So if it hits the 1618 extension of the first leg, it is no longer a valid flag formation. And of course, there is another type of flag formation out there. I'm not going to be getting into that one today. If I have more interest in teaching how I trade the smaller time frames, then I may put out another video talking about it. After that, I'm going to be going into the triangle formation, which I don't have too many. I only had two of these types of patterns here. So there's two types of triangles you can have. There's a 5-leg and a 3-leg. In this situation, this is a 5-leg. 1, 2, 3, 4, 5, followed by the breakdown. So with a 5-leg triangle formation, each leg has to be smaller than the last one. And it is a continuation pattern, so you'll find this in the beginnings or the end of a trend. So hopping up on the higher time frames, you can see overall the trend has been down. And we can see an even larger triangle formation on the 1 hour time frame. 1, 2, 3, which adds to the confluence. Bigger patterns are always better, in my opinion. 1, 2, 3, 4. Or the second type of triangle is a T3, which is a three-legged triangle. 1, 2, 3, followed by a push down and breakout. Now, much like, now taking a look at the 4 hour again, it looks like we're starting to have that push down here. Now hopping back over here, again, so you want to confirm on the higher time frames, you want at least the 2 time frames in a row to be showing the same type of trend. So 1 hour and 4 hours should be bearish for a bearish triangle, or 4 hour and daily should be bearish for a bearish triangle. So taking a look at this, we see that overall the trend is bearish on the majority of the time frames other than daily and weekly. Again, this just cuts down my time. So upon breakout, we should be looking for the inverse 1618 extension of the biggest leg, of the first leg. So this pattern right here just broke out, but it should push down. Let me adjust this to the 1.81935 level. It broke out at the 82792. The stop loss should be the last leg before the breakout. So that'd be the 82997. If you want to be more conservative, you can also have it as the highest leg of the triangle. That's not typically what I do though, but you can do it and it's still fine. Now, where I usually put the stop, well, it is fine to start there. Now, let me move this back up here. So taking a look at this, again, I only trade if it's a 1 to 2 risk reward ratio minimum. So right here, 39 should be 78. And it looks like it's just about exactly a 1 to 2 risk reward ratio, so I would take this one. So that is a solid triangle, and it looks like it's still developing, so we'll see if it ends up hitting the target on GBP odd on the 15-minute. The next one I have to show is a Euro CAD, and this is a T3. So as you can see, 1, 2, 3. It's broken out. Again, your stop loss. Your entry is when it breaks out. The take profit is inverse 1618 of that biggest leg. So it's actually almost hit the take profit already. I would already move this stop loss to break even, and again the trend is already showing it's up overall. Now, the most interesting thing I'm going to show you today is the head and shoulders. I don't have too many patterns prepared for this, but I've done a lot of research and I trade them a very specific way. So as you know, it's a reversal pattern. Now, the first rule of how I trade them is the head should go to the 1618 extension of the first leg. As you can see here, the first shoulder extension, the head ends at the 61 point, so that is check marked. The next step is the second shoulder has to entry point is a 23.6, so it has to retrace to that point. Taking a look here, it looks like it would just miss out on it. Now, that is perfectly fine, of course. Let's take a look here. Looks like it just missed out on that point. So this is a trade I may not enter. You can alternatively use the 38.2 as a second entry. That is just a slightly more aggressive type of trade. The take profit is going to be the 100 extension of the second shoulder. So you'd project it based on the 23.6 or 38.2 depending on when you want to enter. Taking a look at that, you can see here. So we'd be entering at this point right here, approximately there. Stop loss here. So this would be a 1 to 2 risk reward ratio we're looking at here. And as you can see, it just misses the stop loss here before shooting up and hitting the take profit and continuing on higher. Taking a look, I also had one more I was going to show here. Let's see if I can get this quick before the video ends, as my software is going to end soon. It's a 61.8. Let me grab this. The retracement of the head. Hits a 23.6, followed by hitting the 100 extension right here. That's how I trade head and shoulders. That's all I have time to teach, and have a great day, everyone. That's all I wanted to teach for you today. Any questions, let me know.